Welcome back, everybody. Sive Morten is here with the ForexPeaceArmy.com. So let's take a look again on the Forex market and make some update on the trading plan that we have created in the weekend. Well, generally speaking, it was not realized. It's just because market hasn't shown the pullback that we were needed to take the short position, as we discussed. But in general, overall volatility was relatively low. Market remains in the same range that has been set on Friday. And it's because maybe Donald Trump was absent on the Middle East, and actually he had no time to tweet more and just moving the markets. So he has taken the congratulations from the members from the J7, and actually he has no time for this. But anyway, currently we need to make some adjustments to the plan that we have created, and we will start from a bit greater time frame to understand what's generally is going on. On the daily chart, it might be looking not as good as it might be seen on the dollar index. That's why I will show you a picture here, which is dollar index. And here, since the overall price action dollar index is a bit tighter, you could see that it's clearly evidence of the possible double bottom pattern. It is developing with a classic shape, so minor wash and rinse on the bottom of the second valley. So it usually happens when the market just pierced the lows of the previous bottom, grab the stops, and turns up. So taking it all together, it suggests that market is moving somewhere to the 100 level, which is a neckline. So correspondingly, transposing all this stuff on euro currency, we could make suggestion that everything goes to the 114 area. Precisely speaking, this is 113.90. So also with this ABCD pattern on the second top, right? So dollar index, it's double bottom. On the euro currency, it's double top. So it gives us the XOP around 113.34. So I would, if you're holding short and your intent to hold them until this target, I would better to use tighter standing targets with these A points and XOP precisely at the lows. But at the same time, it's just safer. It'll give you some insurance that you will not start competing with other traders who will be searching chance to go out with the short position around the major target. But at the same time, here probably some stops exist, and once market will test it, it will let it to drop slightly lower. So that's why the 1334 XOP also might be reached. This is just for information if you're thinking about where the close position, how it close, so that might be interesting stuff. So that's what we have on the daily chart. Reaction that we have expected for this triple to buy pattern, as you can see, was not sufficient. So we have just minor pullback here. And in general, if we take a look at other markets, dollar is rising, 10-year yields are dropping, so it means the demand for United States treasuries is rising, and gold is also rising. So it has some features of the safe haven demand. That usually happens when yields actually are dropping while dollar is rising, and together with the gold. So it usually happens only with the demand for a safe haven. So what we could do in the current circumstances, if we take a look at the 4-day frame chart, here we have interesting picture. So retracement was just to the 1630, while we said that it might be the hand and shoulders that we intend to watch, and hoping to get the pullback somewhere to the 1685 area, which stands the confidence, right? We haven't got it. Yes, the market dropped. So in fact, hand shoulders has been ruined. But at the same time, today at the bottom here, we've got the bullish grabber. We have it not only on the retail broker chart, but if you take a look at the futures chart, December futures of the Euro currency on Chicago Mercantile Exchange, you also see that this grabber stands in place. This grabber itself suggests taking out of this top. So it means that potentially we could get a kind of the ABCD pattern to the upside. Maybe we will not get directly to 1685, although it is still possible, but at least it might be returned back to the 1630 or maybe slightly higher, somewhere to the 1650. So that's what the grabber tells. But the problem with this grabber is that it's well, it has some fragile foundation. One of the reasons for that is actually here we have the ABCD local downside ABCD target, with the XOP slightly below the market. It stands on 115, 114.98, precisely speaking. And when the market has the important target slightly below the lows, usually it tends to grab it first before show any upside reaction. So that's the risk dealing with this grabber. On the advantage side, what I could say, in general, we are not considering taking long position in current circumstances just because we have bearish context. For us, I mean on the daily, because as you know, the daily chart is a major time frame that we're based our trades. So based on this chart, we have bearish context and we're searching chances to go short. That's why we're not intending to trade the grabber. So if grabber will work and we will appear here or at least somewhere in this area, that will be great. Once again, we will consider taking the short position on the pullback. But if you're a scalp trader and trading on low time frames, the advantage of this pattern to deal with is very close price standing. So you can see the price stands very close to the lows of the grabber, and this will be very small risk. Yes, chances on success may be not superb, but risk very small, and that's actually might be attractive. So you could take some kind of the, I don't know, wild card, trying to take the position with the lows just below the grabber. If it will work, you're appearing here, risk reward will be amazing. So it will be great trade. So sometimes it has some reasons to think about it, and actually maybe at not full trading a lot, maybe in contracted a lot, but that setup exists here, and you also could think about it. Now, what particularly might happen if market will go to the XOP? In fact, on the hourly chart, we could get this butterfly. Its target stands 1486, slightly below the XOP, mostly in the same area, and it might be formed. And a third reason in favor of the possible downward action, and that grabber actually stands at the big risk, is the failure to form the hand and shoulders. So since market has failed to form bullish pattern, it's big chances that this downside action still might happen. So that's the reason. Whether to take position alongside in these circumstances, this is definitely something to think about. Personally, I'm not very fascinated with that, although the grabber looks really fine. All right, so if we can't trade bullish grabber, or at least chances for success not very impressive, what else we could do? As we said, our basic scenario is to wait for a pullback if it will happen. At the same time, if you still would like to take the short position here, you probably could try to use a stop sell order slightly around below the grabber, somewhere between the lows of the grabber and these lows. Because if market will keep drawing high, lower, and it will erase grabber, it will definitely means that market intends to drop below the lows. And here stop entry order might help. So if you place your stop sell on the moment of the breakout, you'll get the position. Because taking the limit position in the current circumstances has double risk. First, grabber is still valid, and if you take the position on limit entry order here, you will be still at least still at risk of the big count in the wrong direction if grabber starts working. Using stop order, you will escape this because your order just will be not filled if grabber starts working. Second, it is actually based on this butterfly. If you're taking position based on the butterfly, it's not good placement because you're taking the position very close, or better to say very far from the invalidation point of the butterfly. And if market will show some upward direction returning back to the top, butterfly may appear to be still valid, but you will be in very big drawdown here on upward direction. So from that standpoint of view, it's also not very attractive to take the limit position from that standpoint of view, because it's too far where you have to place your stop. That's why in the current circumstances, I think that better to use either to wait if upward action will happen within grabber, or if you do not want to wait, or you would like to combine both the scenarios, they are not mutually exclusive. You actually could wait for a pullback and using stop sell. One of them will not be filled, right? So second, as I said, is probable attempt to using the stop sell order. And of course, speaking about the grabber, I already explained everything about this, but you also could think whether you would like to take it or not. So that's all probably for now. you can see some tricky moments exist for trading purposes currently on the intraday charts, on the daily chart, but taking in a general picture, as we said on the dollar index as well, here it seems that market indeed trying to moving slightly lower with this action back to the 114. So we will see.